stocks, ETFs, currency, and indices. There's so many instruments and securities out there to be traded, but which one is actually a good one for you? That's the topic of today. We are actually going to be speaking about different types of instruments and as well which one is the best. And the most important thing that I actually want you to do is to understand all of them. So when you are deciding on which one you're going for, you already know the ins, the outs, and as well some of the things that you need to know in order to make a right decision. Obviously, guys, if you believe that you're going to be gaining so much value from my video today, one thing that I need you to do is to click on that like button, because what it does is that it will show that you've got the will to learn and you are looking into learning all that I'm going to be teaching. And as well, kindly just subscribe to my YouTube channel and turn on the notification bell. This way, whenever I upload a video, you will be one of the first people that will be updated, or you will know. So now let me just break down the differences between understanding the stocks, ETFs, currency, and as well indices. Okay, so now what I'm going to do is that I'm going to explain these terminologies or these instruments to you so you understand what it is, and then from there we're going to be looking at which one is actually better compared to the other one, but according to just what I believe in. So obviously you also need to just take these understanding or take these what they are, and what you'll do is that you'll be able to just make your own decision in terms of looking at which one is much more easier for you to read or move forward, because at the end the technical and as well the fundamental would remain the same, but how which instrument you choose plays a very major part. So let us now start by breaking down what a stock is. A stock, also known as a share or equity, represents ownership in publicly traded company. When you purchase a stock, you become a shareholder of that company and have a claim in a portion of its asset and earnings. The value of your stock can increase if the company performs well or if the demand for its stock increases, and you can sell your stock for a profit. So you understand that you are now purchasing a piece or an equity in a company. So that's how you can go about understanding a stock. Let me explain to you guys what an ETF is. An ETF is a type of investment fund that holds a diversified portfolio of stocks, bonds, or other assets. ETFs are traded on stock exchanges like individual stocks and can be bought and sold throughout the day. ETFs offer exposure to a wide range of assets with lower risk compared to individual stocks and can be more easily traded than traditional mutual funds. So one thing that I took is that looking at ETFs, it's a bit more low risk, and it's a bundle of all these stocks. ETFs are traded on the stock exchanges like individual stocks, so it's more like when they're bundling up stock in terms of one package, maybe the top performing stocks in the last month or the last year, then they'll put them up, then they'll package it, and maybe they can name it a different type of ETF or something, but it's basically just them being able to package it. And indices, index is a measure of performance of a group of stocks or other assets. Indices are used to track the overall performance of particular market or sector and are comprised of a basket of individual stocks or other assets. Popular indices include the S&P 500, which is normally the one that we love trading, US 500, which tracks the performance of 500 large US companies, and the Nasdaq Composite, and as well the Nasdaq, which tracks the performance of all companies listed on the Nasdaq Stock Exchange. So obviously, even though I understand that the Nasdaq Stock Exchange would be involving 100 companies that are non-financial, so that's some of the ways that you can see how indices are. It's basically just being able to just have something that tracks out, like let's say with the US or S&P 500, it tracks out top 500 performing companies. So that's how you can go about seeing it. And a currency, which this is the most popular one, because most people out there are trading currency. A currency, also known as a foreign exchange or forex, refers to the buying and selling of different national currencies. Currency trading is the largest and most liquid financial market in the world and can provide opportunities for potential returns through buying and selling currencies based on fluctuations in exchange rates. Obviously, guys, I did mention to you guys ETFs, indices, currency, and as well stocks. Let us now dive a bit more deeper into seeing how these things can add value to us, because it's okay to know this thing. This information can be easily accessible to anyone, but how can you apply it? So just by coming back down to stocks, investing in individual stocks can provide the potential for significant returns, but also comes with high risk. Stocks can be volatile and their value can fluctuate widely depending on a variety of factors such as the financial performance of the company, industry trends and overall market conditions. ETFs are a type of investment funds that hold a diversified portfolio of stocks, bonds, or other assets. ETFs offer exposure to a wide range of assets with lower risk compared to individual stocks and can be more easily traded than traditional mutual funds with how we did explain with it, and index. So normally you've seen that, like, you know, with everything, the way that it's explaining everything, like now with my understanding, like indices, the way that we trade it, like, you know, we are able to see the points that it gave us compared to, you know, when trading normal currencies. So I think now it's all about like us starting to move a bit more backwards and looking at which one is actually beneficial for you. Should you be a person that actually trades a bit more on stocks? Should you be a person that trades a bit more on ETFs, indices as well, or maybe currency? Which one is for you? And guys, if you guys want me to make a much more deeper video of what type of a person and what type of a character needs to be built, you know, for you to be able to trade on stocks or for you to be able to trade on currency, because I've been actively trading the currency market for over 5 years, and also with indices I've been actively trading it for over like 3 years. So looking at all of this, it's more on, like, you know, something that I believe, you know, we can come up with a way forward for. So now guys, let us now break it down to the end point, whereby I need you guys to understand which one is actually good for you, because I've explained everything to you and I feel like I've fed you guys with so much information. That's why I want you guys to comment below telling me which one you think so far you understand and which one you actually want me to dive a bit more deeper into. But just by telling you the best one that can be traded or the best one that should be trading, it depends a bit more on, you know, your risk tolerance and also your investment time. How long are you willing to, you know, wait for a return? Because like maybe with stocks and equities, you're waiting for dividends and maybe you might not be as patient as that. And as well, something simpler such as risk tolerance, on others find out that they are a bit more high risk. Like we did mention that on ETFs, they're a bit more lower risk. So find out that you're a person that actually wants to, you know, lower the risk compared to, like, you know, trading things such as like your indices. With indices, they are a bit more higher risk compared to currencies, because of the fact that I've been trading both of them. But I've noticed that, you know, with indices, just a few pips on indices, those same amounts of pips, if you see it that way, would be equals to a lot of points. So like it basically just allows someone to, with just a few movements on indices, you can make a lot, which means that you can also lose a lot on a standard account. I'm not speaking about a micro account, but now also on, you know, currencies, which now the pip difference compared to it is a bit more larger. So it's all about that. It's all about your risk tolerance, your investment time. How long are you waiting for something to show up? How long are you actually expecting that to happen? And as well, the last and final one, which is your financial goals. What are your financial goals? Like someone like you might not have the same goals with someone that already has $1 million in the account, or maybe someone that already has done something or has invested. Maybe someone like you would be looking to be making money, you know, within the next week, within the next few months, within the next few years. Someone out there already has money, they're just looking for ways to invest it and, you know, grow their wealth or something similar to that. So it all depends on your financial goals. What are your goals? Which now it comes back down to you sitting down, analyzing what are your goals, what is your risk tolerance. I think the best way that you're gonna come up with a decision is finding out what your financial goals are, what your time frame is for that investment, how long are you willing to wait for that, and as well, lastly, which is, you know, your risk tolerance. How much are you willing to put up front? How much are you willing to risk for you to be able to know that you are heading your way? Guys, if you're looking to expanding your knowledge, your information, if you're looking to learn a bit more, we have all of those that I just mentioned and explained to you guys in a much more deeper and thorough way, where you can just easily access that information at www.forexchasers.com, on which I'll leave the link as well in the description box, which will be the very first link. And obviously guys, I'm excited that you did manage to learn from this YouTube video. Kindly just like this video, comment below, tell me what it is that you're thinking about, tell me what are you looking at, what you actually have in mind in terms of what you're looking at. And as well, I will see you on the next YouTube video. It is your buddy Samutupi. Thank you so much for watching.